You're listening to the Quint podcast.
While experts are still weighing in on the hits and misses of Budget 2022 that was presented on 1st February, for a lot of India's millennials, it's the government's plans for cryptocurrencies that they've been waiting for. India's crypto market, as we know, has been swarming with a lot of young investors and the market seems to be growing. But for years, the government has been dilly-dallying on what to do with cryptocurrencies. A few months back, news of the government planning to prohibit all private cryptocurrencies in a new bill had even left many worried about the investments on digital currencies, leading to panic selling. However, with a new crypto tax regime, the recent budget does offer some clarity on what the government intends to do with cryptocurrencies. While taxing digital currencies doesn't necessarily mean that the government has legalized crypto, what is it that they're indicating? Does it mean that they have warmed up to cryptocurrencies? Does it mean that the ban is off the table now? And the biggest question of all, what do these new announcements mean for investors? Explaining the fine print of it all in this episode will be Quint CEO Naimish Sanghvi. We'll also hear snippets of lawyers Badri Narayan and Vivek Gupta's conversation with Bloomberg Quint, where they talk about the grey areas of these announcements and what should crypto investors do. You're tuned in to The Big Story, the podcast where we dissect the headline-making news for you. I'm your host, Shorbari. Just circling back to the announcements, essentially there are three key takeaways. First, the crypto tax. The exact words that the finance minister said while announcing the crypto tax regime is that income generated from the transfer of quote-unquote virtual digital assets would be taxed at a whopping 30%. But what do these virtual digital assets include? It includes cryptocurrencies like Bitcoin or Ether and others, along with non-fungible tokens or NFTs, which we know is also gaining a lot of popularity among younger people. Now, this 30% tax will be a blanket rate that will be applicable to all these assets. And of course, this is one of the highest tax slabs in the country. Expectedly, there are complaints about this steep tax rate on crypto, but it could also bring down the number of casual investors engaging in the crypto market without proper research on the risks involved. And crypto investments are something that the RBI and the government have been warning against anyway. While this taxation could be interpreted to mean that cryptocurrencies may no longer be a pariah for the government, it's also interesting to note that the digital currencies are being taxed the same way as gambling or lottery wins. Moving on to the second key announcement, there'll be a 1% TDS charge on all transactions made using digital assets. If you gift someone a virtual digital asset, the recipient will also have to pay taxes. The third big announcement is the launch of Digital Rupee, and we'll talk about it in details in a bit. But first, Quint CEO Naimish Sanghvi breaks down the crypto tax for us.
Cryptocurrency transactions are now going to be charged fixed 30% on the profit generated from crypto trading. And this profit is not going to allow any deductions or any other allocations in the calculations of the profit. So essentially, if I bought cryptocurrency worth 1 lakh rupees and I sold them at 1,50,000, the 50,000 profit is going to be taxed at 30%. I have to pay 30% tax on the profit. The second important thing in the budget about cryptocurrency was the proposal to tax every single transaction with 1% TDS. Now, in my opinion, this is a great way for the government to track how much money is going into and coming out of the crypto ecosystem. If I invest 1 lakh rupees in cryptocurrencies, 1,000 rupees of that 1 lakh is going to be deducted as tax by the exchange or the intermediary that is providing this service to me, and it will be deposited against me to the government against my PAN card as tax deducted at source. This helps the government identifying how many transactions are happening in the ecosystem against any individual without ever having to ask for this information from any platform.
Mr. Sanghvi also believes that the new regime won't bring much of a change for investors or for those who are looking to invest in cryptocurrencies because crypto investors were supposed to pay taxes on all the profits generated from cryptocurrency trading anyway.
Now, essentially, the taxation part should not affect anybody who's looking to invest or who has already invested money in cryptocurrencies because we were already supposed to pay tax on all the profits that we generate from cryptocurrency trading. However, now that there is a fixed regime around the cryptocurrency trading, we cannot accommodate our earnings into different buckets of income tax, we just have to pay 30% tax irrespective of the amount of profit that we have generated. So whoever is looking to invest in cryptocurrencies, for you, it is important that whenever or however you try to trade cryptocurrencies and make profit, ensure that 30% of it is going to go into the government's pocket. So be ready for that.
Now, one thing to point out here is what happens when there are losses. For incomes from digital assets, there's a 30% tax. That is clear. But the government has said that any losses from selling virtual digital assets can only be set off against income from the sale of other such assets. What does this mean? Well, in layman terms, you have a capital loss when you sell an asset for less than what you had bought it for. But that could be advantaged by taxpayers to offset losses against other long-term capital gains under tax laws. This would give them the opportunity to reduce taxes on their long-term gains. But crypto trading losses can't be set off against income from stocks, for example. It has to be against income from crypto and crypto only. And there are several question marks around this provision because there are a lot of grey areas that are yet to be figured out. Let's listen to Badri Narayan and Vivek Gupta's conversation with Bloomberg Quint.
One interesting aspect, and I don't yet know, it's too soon after the budget, I don't know if Badri has a point of view on this. One interesting aspect on this is, while you very clearly said losses on cryptos can be offset against gains on cryptos, I'm not sure that the wording is quite so clear, because the wording of the main section actually says that no loss, no allowance, nothing shall be offset except cost of acquisition. Now, therefore, does that operate as a restriction to say loss and gain will be computed for each sale of a crypto asset separately, and therefore even inter se, the losses and gains cannot be offset? I'm not so sure. I had a read on the provision, and my initial reading was that perhaps the intent is you just capture all the gains at one level, subject them to tax, and the losses just vanish. Now, I don't know what Badri's reading of the fine print is, but I'm happy to be corrected here.
No, I think you've kind of hit the nail on the head. So if you look at these two provisions, the first provision talks about no expenditure except cost of acquisition or allowance or loss. Okay.
Yes.
Under any provision. But if you look at B, which is with respect to set off against the other this thing, it uses the word any other provision. Okay.
Yeah,
so it seems to suggest, if you look at B, that losses within that may be allowed, but losses with respect to any other income may not be allowed. That is one gray area already that we see in the use of the word any other provision in the subclause B vis-a-vis subclause A. That is one. We are having this problem when it comes to gaming laws already. Okay. Where, for example, when I'm playing two games and I win something in game A, whether I can set off against the loss under game B. Okay. And this is an actual litigation, an actual issue which is going on in a similar area. You'll find that the provisions are very similarly worded with respect to gaming laws and betting and gambling in that regard. I agree with Vivek that there is a doubt with respect to, for example, I have a Bitcoin and I've made a profit on it. I've got Ethereum and I've made a loss on it. Okay, in the same year. Assume, for example, you don't have any other complication of years and things like that. Whether I can set off, because I've sold this as a block. I've sold 10 Bitcoins and 4 Ethereum together as one block. Whether I can cover it as individual transaction, that is on Bitcoin, I've made a profit and therefore I'm liable to make this. Or am I to say Bitcoin to Bitcoin and then Ethereum to Ethereum? It makes it even more complicated. I may buy Bitcoins at different times. Okay. And then how do I kind of link one with respect to the other? Okay. Similarly, Ethereum at different times. Will it be FIFO? Will it be LIFO? How will it be? Those are other complications as we get into it. But at a fundamental level, whether it will be at a transaction level, or will it be at a block level, or will it be income in that year with respect to all the transactions related to that year, is what we will have to see. But like I said, I'm still reading this fairly closely and trying to come up with an answer. But what Vivek says is not unreasonable. A tax authority can take that view and say, I will give up all the losses. I'll only income from the sale of profitable transactions, okay, is what you need to pay tax on, which can be absolutely devastating because you could have an overall loss and you may not have money to actually pay the tax on these transactions.
But now coming back to the third key announcement, that is the digital rupee, This will be rolled out by the RBI in the coming financial year. The central bank digital currency or CBDC will use blockchain technology. And one big point to note about the digital rupee is that crypto taxes don't apply on this. We know that the government's stance on digital currencies hasn't exactly been favorable, but this particular announcement perhaps also shows that the government is looking to harness benefits from digital currencies. During her budget speech, Nirmala Sitharaman said, and I'm quoting a couple of lines here, quote, "The introduction of central bank digital currency will give a big boost to the digital economy. Digital currency will also be a more cheaper and efficient currency management system," end quote. But for the Aam Janta, the question is, what is the digital rupee really? How is it different from other cryptocurrencies? Simply put, the digital rupee is a paperless form of currency. It's basically the same legal currency, it's the same value, just in digital form. And one primary feature of a digital rupee transaction will be that it's an instant transaction. Now, if you're wondering, where do I get this digital rupee from? When is it going to be available? Well, we don't know yet, but watch out for RBI guidelines on this. So now the question that crypto investors must be thinking about is, what do all these announcements mean for cryptocurrencies going forward? Does it mean that the government has warmed up to cryptocurrencies and no longer plans to ban it? Is it now legal? While we might be thinking that taxing it surely legalizes it, that may not be the case because in India, income earned from illegal activities can also be taxed by the government. And remember that cryptocurrencies are being taxed the way gambling is. So at this point, it's only the cryptocurrency bill that can provide utmost clarity on the legality factor. Mr. Sanghvi also believes that these moves are not exactly to bring out crypto of the legal grey area. He says it's to streamline the revenue.
So I don't think that this move is towards bringing crypto out of the legal gray area or making it legal. I think that this move is essentially to streamline the revenue that the government can earn from people who are investing in cryptocurrencies and making profits from it. Earlier, there was no clarification on how you can calculate crypto taxes, and now we have that clarity. We cannot accommodate into any other bucket. So now I think that it's just that we have clarity on how to tax cryptocurrency transaction or profits, and that's it. It doesn't mean that tomorrow the government might not restrict transactions on cryptocurrencies or may not ban cryptocurrencies. This doesn't mean it has legalized it. It has just provided clarity on how to calculate tax on the profits generated from it. It can be seen as a good news for the industry because now there will be more standardized approaches towards allowing users and onboarding users to trade cryptocurrencies. This may also deter a lot of users who may decide to invest because of influence and not doing their own research. So this is a good move in that sense, but legalization is not part of it. The inclusion of CBDCs, however, means that the government is just trying to keep up with the ecosystem that is, taking this forward around the world. China has a CBDC pilot going on. US might have one. European countries are having one. Why should India stay behind? So I think that from that standpoint, India is on its way to make a mark in the industry using the blockchain technology. But as a use case, I think that CBDCs are not required in India. India is a phenomenal country with robust payment systems, which actually, put to shame developed countries when it comes to, making payments. So I don't think that we need CBDCs or we can change anything with CBDCs. But to stay ahead of the curve, we should launch, and I'm glad that the government did. And we might see progress in that direction going forward.
So now the final and the biggest question. What does it mean for investors? Do the taxes apply to cryptocurrencies that will be acquired in the coming financial year, or does it also apply to older gains and transactions? What should investors do with their cryptocurrencies now? Should you sell or should you not? Well, there's no one answer for what you should do with your cryptocurrencies now, but let's hear Mr. Gupta's take on this.
I think transaction post 1st April 2022, there's clarity. Okay, yeah. There, I think there's no question about it. For the people prior to that, we have always been saying that either it will be capital gains or it will be your profits and losses, gains and losses from profession and business. Okay, so the main thing that we always say is that for the past, a lot of other issues, for example, if it's capital gains, indexation, and so many other issues which were to be taken into account. people used to argue at some level that these are not goods at all, these are not assets, just transfer of value. It should not be under capital gains, or it should not be. I think those disputes, some of this will continue to happen prior to that. The key thing is that if it is capital gain, then you get certain benefits, deductions. I think definitely for gains made prior to 31st March 2022, okay, there could be benefits depending on what it is. But clearly those are not going to carry forward when you're going into this thing. I also know a large number of people have taken a view prior to this amendment that no capital gains or business income is payable on purchase and sale of cryptocurrency on the basis machinery provisions are not there, charging section is not clear, and so on and so forth. All of that disappears. I think post 1st April, that regime is going to be there. I think prior to that, it's really going to be based on issues relating to capital gains and business income issues. What I feel is that now what the government is trying to tax this cryptocurrency is the highest rate that is possible to be taxed on cryptocurrency, according to me, in this structure. Okay. Any other type of sale is going to be at a lower number, that is effective rate of tax on such transaction prior to 1st of April will be lower than this. So based on that, if you want to pay the tax, if you want to sell the cryptos, pay the tax and then be out of it, by all means. But as you know, these are all asset classes that you hold for investment purposes and so on and so forth. So I don't really have an answer to that. But yes, I think government is trying to tax you at the highest effective rate of tax on these cryptocurrencies going forward. So anything before that is probably going to be a lower rate of tax for you to apply on this asset.
And that'll be a wrap for this episode, but tune in to The Big Story Monday to Friday for a breakdown on the top news of the day. If you like listening to this episode, please subscribe to the Big Story playlist for episodic updates. We're live on Apple, Google Podcast, Spotify, JioSaavn, and most of the other popular podcast streaming platforms. For other podcasts, please log on to the Quint website and check out the podcast section. For any feedback, shoot an email to podcasts@thequint.com.
Thanks for listening. Log on to the Quint's website and check out our other podcasts.